Hi, Hank, SixFourTrading. I want to talk about the market today. I did have a market overview over the weekend with the Discord members talking about this possibly running back up to and watching out for this 570s line on the SPY this week. The SPY has been bouncing. I wanted to see it come out of this major support area we've been talking about. I'll zoom back out so we can see how we've been watching this major support area for a while after it broke below it, but never confirmed a full close. It's up here on I think this is Thursday, March the 13th, but then it quickly bounced back up above. So we're now through it, closing above it. We've come into the area. You don't have to touch spot on to 570, but it's right at that 570 area. So now what we're looking for, there's a big day coming up tomorrow. We have the NVIDIA keynote tomorrow, which the last one sparked a rally in the market. We have bottoms or lower levels, I would say, on the RSI indicator, the relative strength indicator. We have the straight line sell-off. I've been talking about the bear flag. This has been forming. Now, my specific address was about the 570. We need to break above the 570 and test the 200-day moving average for this to confirm and close above the 200 moving average, for this to confirm and move up higher. That it really wants to rally back up higher and push back up higher. Sorry, I'm still a little hoarse. So if we get that, now we have, again, NVIDIA tomorrow. We have the FOMC rate decision on Wednesday. If we get a push up above the 200 and above the 200-day moving average and close above that, we can start seeing maybe a push up rally a little bit higher. Okay. If we do not break this area here, this has been here for a while since we broke below it. I've been marking this zone around 470. Say we need to at least go up and test it. Now, this still could be a dead cat bounce. This still could be a bull trap. The bear flag is still in play here. So bear flag, we got the downtrend, we got the flag coming up here, okay? So what we want to watch out for the downside part is that we reject this here. If we don't break above 570, then the break above would be a break above, close above, breaking the 200-day, testing the 200-day moving average, breaking above the 200-day moving average and closing above that average. And then the following day, we open and still stay above the 200-day moving average, and we're not going to happen all this week. And then I can say, you know what? It looks like the buyers are really back in, and the sellers are not 100% in control of this yet. That doesn't happen, so then we can see a lot more downside. This could be just a trap, sitting you back down lower, breaking below this support zone. And one other thing still in play here, we're still talking about it, is the 50 has crossed below the 100-day moving average and it's still going below it, even though you have this move up here. So that's extremely bearish. The def cross would be ultimately the 50 crossing below the 200-day moving average. There's still somewhat of a def cross with the 50 crossing below the 100, but we're nowhere near the 50 getting to the 200. So, but you could see a lot more downside on the market. I'm going to focus in on the SPY here. Qs are pretty much trading the same way, except I don't think the Qs has hit a def cross yet. We'll take a look at that. No, it's getting very close to that to the 50 crossing below the 100. Still bear flagging, just like the SPY is. We have to be cautious here. Tomorrow and Wednesday is going to be a big day in the market. So watch out for that. I'm Hank, SixFourTrading. There's other things we can talk about here. The yields are still, it's the 10-year yield here. This is the Fed rate. Back when the Fed cut rates, they were supposed to go down. The interest rates, at least the yields are supposed to go down, but they actually went up. So the bond market was telling a different story than the overall up direction in the market at that time since the September rate cut. Same thing on the 30-year yield. We are looking for, just check out the VIX. VIX is still holding above 20. Typically above 20, we start looking at market correction territory, which the market has been pulling down above 20. We have not broken and closed below 20 since February. I would say we've been underneath. So March, the month of March is when we broke above, right? Start to see more sell-off. What I'm going to show you here is this is COVID, right? COVID was here. This is where it spiked to 85, came back, started gradually coming down here. Carry trade, that's the Bank of Japan carry trade that caused that big dump in the market for 2 or 3 days. Then the market went right back up. That is what this spike is. Now, you see we're starting to move up. You don't want your volatility index jumping up like that, but we are moving up gradually here. So we're watching the VIX, we're watching the yields, we're watching the SPY and the Qs. We need a market direction. Right now, we're all chopped. We're just trading sideways at the moment. We're just trading sideways within a range, and we want to get out of that range trading, get a directional pick here, and let the market pick a direction, and we want to ride in whatever direction that goes in, rather up or down. I'm Hank, SixFourTrading. Stay tuned for more. Guys, have a good evening.